Well, hello, everyone.
Hi, thank you so much for being here. Good afternoon, everyone. I am Zenobia Harris, CEO for the Kent Chamber of Commerce. I'd like to welcome you to our CEO Roundtable. Today, we have a guest, Tommy Gantz with AWB, and we're going to be talking about B&O tax. So just a little information about our speaker today. Tommy is AWB's Director of Governmental Affairs on Tax and Fiscal Policy and Manufacturing. She joined AWB in December of 2019. Gantz came to AWB from the private sector, most recently as supply chain strategy analyst for Boeing Global Services in Renton, where she evaluated markets and trends while communicating strategy and evaluating performance metrics. She is active in community leadership roles. She serves on the Aerospace Futures Alliance as the chair of the Business Development Committee. She is networking chair of Royal Aeronautical Society Seattle chapter and the outreach chair for the Women in Aviation Seattle chapter. So we are excited to have her here today to talk about a subject that is important to us at the business community. And so with that being said, we'll go ahead and get your presentation started, and Tommy, we'll turn it over to you.
Great, thank you. So just to recap, I'm going to cover really three areas today, a little more extensive than just B&O. We're going to look at the Joint Legislative Audit Review Committee 2020 review of the tax preferences. We're going to look at the work that is being done by the tax structure work group. And we'll also look at a little bit about what happened in the 2021 legislative session as it relates to taxes that affect businesses. So we could go on to the next slide. All right. So for those of you not familiar, the Joint Legislative Audit and Review Committee is also called JLARC, and their goal is to work to make state government operations more effective, efficient, and accountable. So the committee is comprised of an equal number of House and Senate members, both Democrats and Republicans, and they pursue its mission by conducting performance audits, program evaluations, and sunset reviews. So when a tax incentive expires, is called a sunset, and other types of analysis. Most recently, there was a bill passed this last session that requires JLARC to add a component of an audit of racial equity within the audit reviews that occur. So they're still working on how to create a platform for that. And they're hoping in a couple of months they'll be able to come out with some suggestions around how they might accomplish that work. And so based on these assignments, they have nonpartisan staff auditors under the direction of the legislative auditor, and they independently look at these tax preferences and have either recommendations to improve the performance of the incentive or preference, or to recommend that perhaps it not continue on. So in the last review, the auditor had identified 4 preferences for further review, including 2 that were not achieving the stated objectives and 2 for industries that have changed since the inception of those preferences. So the first one they looked at was the customized training credit. This may or may not affect some businesses within the Kent area. I believe it does, but the auditor will give a conclusion, they will make a recommendation, and then there's also something called a citizen commission. And the citizen commission is comprised of citizens who work in conjunction with JLARC to also look at the preferences. So for the customized training credit, they found that it was not attracting new business and it was unlikely to contribute to business retention. So they recommended that they should allow the legislature should allow the credit to expire. They believe that funding could be redirected to other programs if there's an interest in maintaining support for this credit. And I do know that I do believe that I heard some talk of some support for this credit. So they've recommended that it should expire on July 1st. So it's coming up really quickly, just in a couple of weeks. The Citizen Commission, however, did not endorse the legislative auditor's recommendation. They suggested that it has several advantages over other existing grant programs, that it was more likely to be used by existing small businesses, but who cannot easily send workers to offsite for training or handle complex grant reporting programs. and that this program should be continued, but with the stated objective of focusing on recruiting, retaining, and expanding existing small businesses. So it's interesting. It's not often that I've seen disagreements there on that. The second one may also affect some businesses in the area, hiring unemployed veterans. This one was enacted in 2015 and expires July 1st, 2023. And the legislative auditor concluded that the preference had a very limited use, and the legislature's goal of reducing the number of unemployed veterans has not been met. But they said basically that they should modify this preference to better serve unemployed veterans. The legislative auditor recommended that some options could include designating a state agency to actively promote the credits, focus on a subset of veterans or businesses, or redirect the resources to other state-funded veteran employment programs. And if anyone has questions as we go through, or if you don't find that what I'm talking about you feel is relevant to your business, feel free to chime in. Happy to answer questions as we go. The Citizen Commission in this particular credit did endorse the recommendation. They did have an additional comment that the legislature should re-examine and modify this preference, and that it should consult with the Department of Employment Security and Veterans Affairs. The third credit, I know we have quite a few microbrewers in the Kent area. I've visited a few of them. That began in 1993, and there is no sunset, so they still will continually review it. The legislative auditor concluded that it had a $7.2 million biennial preference that created an estimated 2 to 6 jobs in the beverage manufacturing industry. Distributors receive about 84% of the direct performance savings. And then the preference provides a net $3.30 beer tax exemption for the first 60,000 barrels sold by breweries that produce under 2 million barrels. And I do believe a lot of the breweries I've visited in the Kent area have been much smaller breweries, so they would probably be eligible for this type of preference. So the only recommendation from the legislative auditor was to clarify and include a performance statement stating the policy objectives and providing some metrics that they can measure whether or not the objectives are being met. And then the Citizen Commission endorsed this recommendation with no comment. And then the last one is around farm worker housing. There is no expiration date. The legislative auditor concluded that the type of exemption, or this exemption, may have incentivized construction of some types of farm worker housing. I don't know if we have, I know we do have some farm out there in the Kent Valley, but I don't know if there's farms that are eligible for this incentive in the Kent Valley. But they do believe it incentivized construction of some types of farm worker housing, and that the exemption requirements may not align with other current housing practices. The legislative auditor recommended that the legislature add a performance statement and determine if it should align with other funding sources or be maintained in its current form. And the Citizen Commission also endorsed this. So just a look at some of these. I know they came out, gosh, was it Tuesday? They had another meeting, and we're looking at the next set of reviews that they will be doing. Now there's some other, we can go ahead and go to the next slide. There's some other additional reviews that I'm not going to cover today, because I don't believe that they would impact anyone in the Kent area, but some of them include tribally owned lands for economic development, shipping farm products to interim storage facilities, livestock nutrient management equipment, and anaerobic digesters. And we can go on to the next slide. So the next topic I'm going to cover is the tax structure work group. And for those of you not aware, there is an effort to look at our state's current tax structure and look at some other potential scenarios and determine if we should move to a different tax structure. And I'll talk a little bit about capital gains later and how that legislation that passed this year will fall into the work of the tax structure work group. So we can go on to the next slide.
Tommy,
Uh-huh.
can I ask you a quick question about that?
Sure. Absolutely.
So is the tax structure work group under the umbrella of the JLARC tax review, or is it separate from the legislature, or is it just an AWB thing?
No, it's completely separate from all of those things. It's its own piece of legislation that began. I think there have been several of these efforts as far back as the 1930s. There have been efforts to instate some form of an income tax within the state, and we have some constitutional limitations around that. Now, in our state, it is constitutionally allowable to have a flat income tax of up to 1%, but it has to be flat, it has to be uniform, and it cannot exceed 1%. There is a lot of reporting that's out there. I come from Boeing. I was an analyst for a number of years. And what I can tell you is if you torture the numbers long enough, they'll tell you exactly what you want to hear. And so this came as the result of legislation. This is not the first time a tax structure work group has been enacted. I don't remember when the last time it was. It may have been like 10, 15 years ago. Nothing came of that. No changes were really enacted. Um, I'll go into that the whys a little bit later. But this was the result of legislation from 2017 that allowed this work group to be constructed. And as you can see, the members consist of both members of the House Democratic Caucus and the House Republican Caucus, the Senate Republican Caucus, and the Senate Democrat Caucus. I will say that this is more heavily desired probably on the Democrat caucus side. I'm not aware of anyone on the Republican caucus side that is, I shouldn't speak for them, but I'm not aware of anyone that is ready to move forward with any proposals yet. They want to wait until the work is complete. So I will go into the timeline for this as well, but you can see that they also have some technical advisors. So they have the Office of the Governor, the Department of Revenue, the Association of Washington Cities, and the Washington State Association of Counties are technical advisors. So we can go on to the next slide. So primarily the stakeholders in this effort who the legislature is looking to have some engagement with. And I will start by telling you, you can get updates on this work. The website is taxworkgroup.org. And that is the Tax Structure Work Group website. That's their landing page. And there is different tabs on there. And there is a tab called, I think it's Learn. Let me pull it up here. And you can sign up for updates and you can sign up to submit public comment. It is under a tab called Communicate. So you can sign up to receive meeting information and updates, and you can submit a comment to the work group directly through this webpage. They're also going to be creating a tax calculator so that you can input your individual sort of calculations, if you will, and see how the different scenarios might affect you. So they're primarily wanting to reach out to different community members, businesses, different language groups, and different geographic regions. And we can go on to the next slide. So this is how they plan on engaging these various groups. For community members, they will do some online meetings. They're hoping to get back to in-person meetings. They're looking at online surveys, paper surveys, and everyone will have access to the tax calculator. Similarly with businesses, but they're not doing the paper surveys. We've been doing something called listening sessions. So I have been engaged in those conversations. And then they want to do outreach to various language groups, different ethnic communities, and different geographic regions. And they have different outreach plans on how they plan on engaging those individuals. And we can go to the next slide. And this is sort of the engagement timeline. So this has been in work since 2017, and then the work was extended through legislative action. In the spring of this year, they've been working on some planning, community outreach, partnership strengthening. Then in summer 2021, they want to try and start some in-person meetings, some deeper engagement. And then in fall 2021, they want to have some town halls, some multilingual sessions, and some more feedback. Now, the actual timeline, we can go to the next slide. They're supposed to be assessing all of these various scenarios between now and 2022, and in the 2023 legislative session is when they are supposed to have a final sort of decision upon which pathway they want to go forward with, and then they want to try and implement that through the legislative process. Because we do have a constitutional prohibition above a graduated income tax, there would need to be a constitutional amendment run and pass in the legislature. And then that would have to, obviously the people would need to have a say in that. So their engagement partners, to date, there's a consultant team working with them. The TSWG, as listed in this slide, refers to the tax structure work group. There are 35 organizations that have expressed interest in participating so far. AWB is one of those organizations. And so if you want to get engaged, you can go participate by hosting one of the We Go to You presentation sessions. You can share the survey with your members or people within your business, and then any promotion of the tax town halls. So we can go on to the next slide. So far, here are the organizations that have reached out and shown interest in partnering. You'll see that we're under statewide business organizations. We are listed there. So AWB, for those of you that are not familiar, is the Association of Washington Business. We serve as the state's Chamber of Commerce, and the Kent Chamber is one of our Grassroots Alliance partners. And then we also serve as the National Association of Manufacturing. We're their state affiliate. So that's what we do. We're the oldest and largest business association. I think we have roughly at any given time between 6,000 and 7,000 members. I think about 80% of our membership has 50 or fewer employers, and about 60% of our membership has 10 or fewer employees. Somewhere around 20% are large corporate members. So we do have a very diverse business mix. And we can go to the next slide. So there is a preliminary report. If you go to the Tax Structure Work Group website, which I see was posted in the chat, there's some materials in there. There are various reports that are often cited. I'm happy to provide some additional materials. They often are referencing something called the ITEP report. The purpose of the ITEP group, and I can't remember what the acronym stands for, is to implement an income tax in every state, particularly a graduated rate. So based on that alone, we fall at the bottom of their rankings as a state. They say that our state is very regressive in terms of its tax structure. We believe that there are some flaws with that report. There's a Washington Research Council report out that shows that in that ITEP report, they overestimate some spending and underestimate reported income of the surveyed people within the report. And I'm happy to share more by email. I will make sure that everyone has access to my contact information. So if we look at a comparison of what our state's tax revenue was in 2020 and relative to 2002, and the reason we're using 2002 as a reference point is I think around 2002, the Gates Foundation came out with a study. So the original work of the tax structure work group was surrounded, the basis for that was the Gates Foundation study. That has evolved. That study is now somewhat dated, and they're doing their own research. But there is a preliminary report out there, and you can pull it up and look at it. And if you have any questions, I can send some additional resources. But when you look at the percentage of what businesses pay, it's in their reporting, they show 2020 and they give you the dollar figures. They give you similar percentages for 2002, but what they don't show you is how much the budget's grown. Around, gosh, I want to say 2009 or so, our budget was around $23 billion. The today's budget that passed this last legislative session was $60 billion. So our budget has grown exponentially. And we can go on to the next slide. So what they are going to do is there another question?
Yeah, can I ask you? I'm not sure that I follow why the growth of the budget is an important framework for analyzing the percentages. Could you take that just
yeah, we can go back to the next slide, because if
step further?
Yeah, if you can go back to the next slide, I can show you what that looks like. So if you look for the B&O tax at 17%, if you look in 2020 figures, that means that $4.6 billion of the budget came from B&O taxes. But in 2002, if you look at B&O taxes, that only accounted for $1.91 billion. So the percentages may be relatively same, but businesses are effectively paying more. There is more revenue coming as a result. The state is doing very healthy in terms of revenue. We were one of only 3 states during the pandemic that had a positive GDP. So while there may be some challenges with our tax structure around the equity piece, and I think there's some effort to resolve that, the actual function of our tax structure, it's working very well in terms of revenue generation. We're very healthy financially, whereas many states were not during the pandemic. Does that help? Okay, next slide. So the tax structure work group is looking at a multitude of scenarios. This isn't the only set of scenarios. They're also looking at a scenario that mirrors Idaho and a scenario that mirrors Oregon. What they are doing in these scenarios is called a revenue neutral exchange. So if we were to take our tax structure, and for example, if you look at scenario A, the purpose of scenario A would basically be to implement a wealth tax and no other adjustments to change it to taxes. We would have to do revenue neutral. So we would get the same amount of revenue from that tax structure as what we have in our current one. And that would adjust like the other taxes that are paid. Scenario B says, okay, scenario A says, okay, we have a wealth tax, and then when you get to property tax, you're going to add a limitation factor by adding the wealth tax. So you're going to limit property tax by adding a wealth tax. It'll be a revenue neutral exchange. Scenario B says, okay, we're going to add what they call a value added / margins tax and employer compensation tax. And then with the B&O, what they do is replace that with the value added tax or the B&O tax. Scenario C says we will replace the B&O tax with a margins tax and an employer compensation tax, but not what is different between scenario B and A? I can't remember. There is a difference, but I don't remember what it is. And then we look at scenario D. That's if we do a flat personal income tax, and then the sales tax is reduced to like 4.5%. And then they also would replace the B&O tax with a corporate income tax. So there's all these various scenarios. And one of the scenarios they looked at is if our state replaced the B&O tax with the flat corporate income tax rate and we stayed revenue neutral, meaning we had the same amount of revenue going to the state, we would be at a 15% corporate rate. We would be the highest in the nation. So there's these different scenarios that they're proposing, and we can go on to the next slide. And those scenarios will get into why the legislative update is important. So basically, the tax structure work group is supposed to look at these different scenarios, come up with some suggestions for how to implement one of these particular scenarios after some engagement to, both businesses and different various stakeholder groups. And they're supposed to pick one of those scenarios and try to implement them. The challenge when we get into that, and we'll talk about that with capital gains, is they are starting to run legislation to try and bring some of those scenarios in early. The challenge that we're seeing with that is that not all of those scenarios entail a capital gains tax. So our association is currently involved in litigation against the capital gains tax because they're saying it's an excise tax. We believe an excise tax is a tax on transactions. And so we'll talk a little bit more about capital gains down the road. But we can go on to the next slide. So just talk about a little bit what the session looked like. And boy, that slide is blank, and I don't know why. It is not blank on my end. I added some things. There we go. I think one more should do it. So it was a 105-day session. So for those of you that are not familiar, sessions in even years are 60 days. Sessions in odd years are 105 days. Those are the budget years. The 60-day sessions are the supplemental budget years. This year, it was completely remote. We had no access to lawmakers within the Capitol setting. It was democratically controlled, and all of the bills had to have a component of either racial equity, COVID-19 relief, economic recovery, or climate response, which is why there were quite a few bills that you saw come through with some economic components to them too. Excuse me, some climate components. And we can go on to the next slide. It was a pretty tough year for businesses in terms of legislation. There were some very big majorities. It kind of moved some of the policies away from the middle area. So the House was made up of 58 Democrats and 41 Republicans. And the Senate was made up of 28 Democrats. And there were 20 Republicans, but one Democrat actually caucused with the Republicans in the Senate. There were a lot of new members, first and second term legislators. So there were 45 new legislators in the House and 14 new legislators in the Senate. There was a new speaker, and again, remote made everything very hard. Usually when you're in Olympia, you have that eye contact, you can catch people in the hallways, you can have conversations that are, much easier to have in person because there's a lot of nuance and it's all missed on remote. It was very difficult. You can go on to the next slide. So this session, what it looked like, there were 335 new laws enacted. That was probably the lowest number of bills passed in an odd year in a long time. There were 1,168 bills introduced, which was significantly diminished from previous years. I think last year in a short session, there was more than 2,000 bills introduced. 335 of those passed. At the time that I had done this, 2 of the bills had been vetoed. I think there are 2 to 5 more bills that have been vetoed, and there were 17 partial vetoes, so that those figures probably need to be updated. And there was some controversy around those vetoes and controversy surrounding the way that some of the bills were enacted. And we can go to the next slide. So when we look at the budget, that was in gross second substitute Senate Bill 5092, that's an operating budget. So overall, with state spending and federal COVID funds, the state had about a $59 billion budget. It was really close to 60 by the end. We received $8.7 billion in federal funding. For K-12 and higher education, there was $28 billion that went to K-12 and about $5 billion that went to higher education. And social services and general government, there was about $1.2 billion just for government operations, another close to $12 billion for human services, and roughly $7 billion for Department of Social, or DSHS, I never get that right, Department of Social and Health Services. And so the operating appropriations, they were $20 million higher as passed by the legislature. It was some pretty unprecedented spending in April 25th rather than what was proposed. And the difference was due to some appropriations that occurred. The legislature appropriated, of course, the $8.72 billion in federal relief funds, but that's on top of another $7.2 billion in federal funds that have already been allocated or appropriated. Total in federal coronavirus relief funds throughout the various federal programs, I think our state ended up with somewhere around $11 billion. So we received a significant amount of funding. So this budget's 12% higher than the previous budget, but when you include the federal funds, it's 35% higher than previous year's budget or previous biennium's budget. So if we go on to the next slide, that shows the budget. Oh, back one, sorry. That shows the budget growth. So if you look in 2009, 2011, I think that's when we had the Great Recession. We had some struggles, and then going up from, let's see, 2009. Well, you can basically get the idea starting in about 2005, we start seeing pretty significant budget growth. So that's what our state spending has looked like over the course of the last 10, 20 years. It's been significant. Mm-hmm. And then we can go to the next slide. So some individual legislation that may have affected these you as businesses. is the Climate Commitment Act. This is not my issue area. This actually is my colleague, Peter. He handles environmental policy, but there's a lot of nuance to it. So I'm not going to go too much into this, but if you have questions about this bill, I would encourage you to reach out to Peter. I put his information there. I think ultimately it is going to affect the cost of doing business. But again, not my issue area, so I'm not super educated to speak to it. And the next two bills I'm going to list are also not my issue area. So I'm going to provide our AWB policy person that if you have questions on how it will affect your business, you can reach out to them. So next slide. This one is one that I think is on everyone's radar. It's the Long-Term Service and Support Trust Program. It's the payroll tax of 58 cents per I think $100 of payroll to create a long-term care program. It's basically you have one opportunity to opt out of this program forever, and that's on November 1st of this year. You have to have access to long-term care insurance prior to November 1st, 2021. Now you can opt out as far away as December 2022, but you still have to have had that long-term care insurance in place by November 1st in order to opt out. And anything you paid into the program between November 1st and December 31st, 2022, you would not get back. And there's a lot of challenges with this program and a lot of rulemaking that's going to have to occur in order to work it out. So any questions, please reach out to my contact, Amy Anderson. She's fantastic. She handles our healthcare and federal issues. Next slide. This one is a big one too. This one affected a lot of people, unemployment insurance. This one, I would encourage you to reach out to Bob Battles. He's our General Counsel and Government Affairs Director. There was some early action legislation that was passed that was supposed to help, and then some additional legislation that was passed at the end of session that was supposed to provide some additional funding. It's still a significant increase to employers. So any questions, please reach out to Bob. He'd be happy to talk to you. And next slide. I don't know if anyone is going to be too interested in this slide. There was a bill that Senator Schessler runs every year to clean up the tax code. If you have any questions about this bill, I'm not going to go into too much detail in the essence of time. Feel free to reach out to me. Happy to answer that. But a long laundry list of things that were impacted there. And go to the next slide. So other new taxes and programs. House Bill 1297, the Working Families Tax Credit, finally was funded, and House Bill 1477, the National 988 Suicide Hotline. It makes changes to the current, the Working Families Tax Credit, makes changes to that program in a couple of ways. It funds the implementation of that tax credit. That fund has been there unfunded for a long time. It establishes who are the eligible individuals who can participate in the program and receive the tax credit. It also has people now using an individual taxpayer identification number instead of a Social Security number. And it modifies the amount of the refund that an eligible individual is entitled to receive and incorporates a phase-out system for refunds as an individual's income increases. The National 988 hotline basically is an initial tax rate of 24 cents per line per month. It affects VoIP lines, landlines, cell phone lines, prepaid cell phone lines. So if you're a business that has a lot of employees carrying around cell phones, probably need to have employees and thousands for that to be super impactful, but it will have an impact. Next slide. This was a big one. House Bill 1095, super early action bill, passed unanimously. Basically, if you receive a grant on or after February 29, 2020 related to any national or state of emergency, any national emergency or state emergency proclamation, the state excise tax on that are waived. The B&O tax on that is waived. House Bill 1033, another bill where it's a tax incentive or tax preference that was extended. It basically just extends the expiration date for the Washington Customized Employment Training Program. That's one I talked about very first. It was supposed to sunset again, the Citizen Commission did not agree. That has been extended, but it also now requires the State Board for Community and Technical Colleges to report certain data from the program to the legislature. House Bill 1495, we do have some auto dealers here in the Kent Valley, I think. Most, I think, are more towards Renton, but we do have some towards Auburn too. But there's an incentive. This bill has been vetoed by the governor. So it is no longer effective. And then SB 5000 is a hydrogen fuel cell vehicle sales and use tax exemption program. Don't know if anyone that's going to affect on this call. So we'll go on to the next slide. Property taxes. So 1332, property tax deferral due to COVID required county treasurers to grant a deferral of 2021 tax payments for certain businesses via payment plan if that request is made by April 30th. We've exceeded that deadline, so don't think there's an opportunity for anyone to take advantage of that, but that did occur. And House Bill 1189, tax increment financing, that was a big one. I don't know if there's a potential for that in the Kent area, but it is a public-private partnership that uses local property tax revenue to designate a tax increment area and create business development in an area that otherwise would not have been able to have that type of activity. Next slide. So taxes that we know we're going to see again next session. There is a bad debt bill. So the Department of Revenue and Lowe's were engaged in some litigation that went to the Supreme Court. Basically, if you're a company that has credit cards and you have a customer that defaults on it and you assume that debt, you are in theory allowed to have a B&O deduction for that to offset the sales tax. That bill failed pretty badly, and I know Department of Revenue strongly would like to see that come back next year. We know that Representative Frame ran a wealth bill this year. It didn't go. We've been told that she will be running it again next year. Also 1440, the anti-displacement bill. It is interesting because it's sort of like a split roll property tax, but it doesn't function in the same way. Provides property tax relief to businesses or to residents whose homes are valued at under $250,000. May not affect a lot of homes in the Kent area, but over on the eastern side of the mountains could affect quite a few counties. And then 2907 was run in 2020. It didn't make it out of the gate this year. We do expect to see another payroll head tax effort, especially since the Seattle courts came out and said that the Seattle payroll tax is perfectly legitimate for them to have. Next slide. So this was the big bill that I was really engaged in this year. This is the capital gains bill. The rate on this was 7%. This would be on top of the federal rate. This was called an excise tax. However, it begins on January 1st, 2022, but collections begin on April 15th and they require your federal taxpayer information. Excise tax is traditionally on transactional basis. This is based on your income. So there is some dispute about whether or not this is an excise tax or an income tax. The deductions, there are numerous exemptions. All real estate except for publicly traded companies is what we were told by the Realtors Association. But there's some concern around farmlands or land that is tied up in an LLC with minority ownership. So I think they're still working on some rulemaking around that. This bill is going to take a lot of rulemaking. Cattle, horses, breeding livestock, depreciable property, timberland, commercial fishing privileges, goodwill received from the sale of auto dealerships or qualified family-owned businesses are exempted from this bill. To be qualified as a family-owned business, you have to have a qualifying interest in the business for at least, I believe it got changed to 5 years immediately preceding the sale. And the taxpayer or his or her family had to materially participate in operating the business for at least 5 of those 8 years. That's what it is. They have to have had a worldwide gross revenue of $10 million or less in a 12-month period. And there is a standard or combined deduction of $250,000. In a traditional tax system, like if you do a federal capital gains, if you're married but file separately, you each get a 250,000 deduction. That's not allowed in this bill. If you're married and filing jointly, you jointly get one $250,000 deduction. So it's very unusual. That way, there is a deduction for charitable contributions above $250,000 and it's capped at $1 million. The rate started on this bill at 9%, dropped down to 7%. The whole reason that they said this bill was necessary was to fund childcare. However, the first $500 million gets deposited into the Education Legacy Trust account, which primarily has been used for K-12 education, and that's sufficiently funded through McCleary. But they made an adjustment to this account and allow childcare to now be a utilization. What's interesting is the remaining monies go into the common school construction account. So that is actually in the capital budget, and I think it has to do with school building maintenance or school building construction. And so it's an interesting bill. It's been a lot of controversy. There were 2 lawsuits against this filed, both in Douglas County, one by the Freedom Foundation and one for the Opportunity for All Coalition. We are a part of the Opportunity for All Coalition. And so we'll just have to see how that comes out. The Attorney General requested this week that the litigation be dropped and also requested that the courts move that from Douglas County to Thurston County for consideration. So more to come on that.
Can I ask you a quick question about the school construction?
Absolutely.
Do you anticipate that BIAW or the master builders will, if this stands, and if that use is allowed, that BIAW will move to try to put some kind of limitation or prohibition on school-related impact fees, since there's money, a new revenue source for that?
That's strictly a question for BIAW. I would reach out to Jan Heimbaugh on that. I couldn't even begin to speak to their intention on that. Um, that's an interesting question, though. I'd be happy to reach out to her and ask her that question for you.
The only reason I ask is for years, Frank Chop has said that the state ought to fully fund school construction and get rid of school construction impact fees.
Okay, that's some interesting history. There's a lot of history out there that I'm still learning. And that may be what's behind where that money went. But it was interesting because, we didn't really need the revenue. The budget would have been fully, funded without the capital gains. So the push for it was the whole, we need to fund childcare. But really, when you look at where the money's going, it's going to end up again in K-12 and some childcare, and then it goes to this construction account, which is unusual. I don't generally see funds split between the capital budget and the general fund. So that gives me some context of what may have occurred there. Could we go on to the next slide? Any other questions before I move on around capital gains? All right. So this is just kind of a history. You had asked about the history of the tax structure work group. In 1932, there was some effort where the citizens did back a limited income tax, and it was ruled unconstitutional. Every effort since then, and there have been 10, 1934, 1936. It looks like it's just every couple of years. It seems like there has been some referendum around either a constitutional amendment for an income tax or a capital gains tax or some variation thereof. And the people have always overwhelmingly said, no, we don't want that. So one of the challenges we had with the capital gains tax, we had a couple of challenges with it. The first is it doesn't seem to have parity between the public and the private sector. We have your 401k would be exempted, but if you're a business owner and you're using your business shares to fund your retirement, you're not exempted, and you've been creating jobs and paying on those taxes, and then you're going to be taxed again on retirement funds that you may need to sustain yourself. They say, I read a report recently that said if you have a job that pays roughly $70,000 a year, you need about $3 million when you retire to maintain that standard of living. So if you're paying both the federal income tax, federal capital gains, and then the state capital gains, if Biden ends up raising the current capital gains rate, we could end up paying close to 53% capital gains on that's a significant amount of your retirement if that's what you're using it for. The second thing is, of course, the conversation around whether it's an income tax or an excise tax. The third thing is the tax structure work group has not completed their work, and they're implementing pieces of that work early, and that piece doesn't relate to all of the different possible scenarios, and that we would like to see them wait and implement that all at one time. Because what happens is if we don't restructure and we maintain a capital gains tax, we'll be the only state in the country that has a capital gains tax and no income tax, and we will have a piece of tax policy that's not really compatible with our other tax system. So it's very unusual. So there's just a lot of challenges there. We'll have to see how it plays out. Um, and then let's see, I think that concludes my presentation. I think I hit it right on the mark there, time-wise. The last slide is just my contact information. If you have any questions or you want to learn more about AWB, I'm more than happy to share any information that I have, any reports, anything that I have access to, I'm happy to share. So any final questions or thoughts or conversation?
I just have one in connection with the I forget what the acronym for it was that is the report that's repeatedly referenced with regard to us having the
Oh, ITEP, yeah.
ITAP. Yeah, you said the Research Council has done an analysis of that. You know, where we could find that Research Council analysis of the ITAP report.
Yeah, I can get that over to you. I could probably pull it up right now if I can find the email that I have the link in. Or I can send it over to Zenobia and she can distribute it to the group. So there's a lot of different reportings out there. The Tax Foundation's done some reports. Like I said, if you torture the numbers long enough or you have a certain position you're trying to accomplish, and that's true of any organization, you can generally make the numbers work. If your goal is to implement an income tax, of course, we're going to be at the bottom of the list. But so there are 3 issues that Washington Research Council cites with that report. So that report is based on the amount of taxes. Often in the legislature, we hear, the top 1% pays X amount, the bottom such and such pays X amount. And a lot of times they're citing this report. But in that report, it appears that, especially with regard to Washington state, they are underestimating people's income. So when people receive stimulus payments or unemployment benefits, they are not considering that their income for reporting purposes and haven't included that. So, like, for example, in this most recent round of unemployment that people have been receiving from the federal government, they're not going to have to pay an income tax on it. Whereas you and I, who are still currently working, we receive income, we are paying income tax. So then that's not reported as income in some instances. And so there are some instances of that. And there seems to be an overestimation of some of the spending that's occurring. There's also a concept called fiscal federalism that Washington Research Council goes into in great detail. I'm not super educated on that, so I don't feel comfortable speaking on that. But it is interesting. The different ways you can look at numbers, what you can include, what elements you don't include to kind of make your case. And so there are reports on both sides. In fact, I think the tax structure work group lists the tax foundation reporting as well, but they do not list the Washington Research Council reporting. So I will find that and I'll get that over to Zenobia for you. If you're interested, in January in the Senate Ways and Means hearing, the tax structure work group did come in and present a report on their efforts and what that looked like. It's a much more thorough report out than I was able to give. It's probably an hour long, maybe less. The legislature asked some questions along the way. That might be a good way for you to get an understanding of what they're doing. I'll be happy to send a link to that and a link to that presentation. Anytime they do a presentation in the legislature, those materials are all accessible. If someone gives a presentation, you have access to that presentation material. So I'll make sure to get that to you as well.
Thanks very much.
Yeah, absolutely. Any other questions? All right. Well, you have my contact details. I'm always happy to talk to anyone. I try my best to do things in a sort of a non-biased fashion. Obviously, we are engaged in that lawsuit. We don't agree with the capital gains tax. So, if you're an organization who feels strongly, and I do have some members who have reached out and said, "Hey, we support that. How do I get in touch with my legislature and tell them?" I give them that information. I tell them how to participate. Everyone has the right to, engage in advocacy their way. But for the majority of our members, they didn't agree with this bill, and so I'm representing them in that.
I do have one other question, just in terms of your crystal ball. I'm looking for the numbers here. You said that and I'm assuming, I don't know if this is the operating budget or the capital budget or both, was 12%. The budget just passed was 12%.
Yeah, yeah, close to 13%.
13%. Okay,
Yeah.
then the last biennium. And
Hmm.
you said, but if you add the federal funds to that, it's
35%.
35% higher.
Hmm.
So one of the things that it seems to me happens is um, these federal funds come in, and we've seen this with 100,000 new cops during the Clinton administration, or a million new cops, or whatever it was, 100,000 new cops, or whatever it was during the Clinton administration, and that they get that funding, and that federal funding terminates, it sunsets, and then there is a drive to um, backfill that, and
Hmm.
so uh, are do you think it's likely that we'll see a really serious effort going forward to maintain funding at the supplemented 35% level, rather than will that become the new current law budget for purposes of future budgeting, or do you think it will simply be the 12 to 13% that they'll rely on, or somewhere in between?
Yeah, I mean, on average, I think it's between like 9 and 12%. Um, Emily Makings at Washington Research Council is better. There's actually a fiscal website that you have access to. You can download all the budgetary information. They have an analytics page. You can pull it into spreadsheets and play with it. So I think it depends on how you look at it. The federal funds were used for a number of activities. So I think there are some instances where they have included it and maybe programs that are ongoing and they'll need to find other funding. I think that's limited. I think the majority of funding went to one-time use programming, grants for businesses or, grants for schools. They went to a variety of different things. So of the $11 billion that we receive, I want to say like 2.9 billion went to schools. Somewhere around 1.5 billion went to all the different counties. Another 1.2 billion went to all the different cities. And so each city or county, I don't know how they each implemented that, but they'll have to address that in their next budget. As for the state, I think there are some programs where I know like 500 million of that went to backfill that unemployment hole that we had. So that's going to be an ongoing problem, but are they going to need that funding again next biennium? It's really difficult to say. I think the money went to so many different places. You'd have to look at, where did the money go? Is that a one-time use, like a grant program? Did it backfill a funding gap, or is that going to an ongoing program that's going to need continual funding? That's one of the challenges too that we also had with capital gains, is they're saying they want to use it for an ongoing child care program, but that tax is particularly volatile, so it's not a consistent source of revenue. If you look at the California state budget, they actually remove capital gains when they do their budgeting to look at it, because the income from that is so volatile and all over the place that it's not reliable. um,
I think, I mean, I agree with your technical analysis. I was more thinking in terms of a,
Budget growth.
no, a political messaging,
uh,
independent of the reality of the one shot money from the
Yes, yes, I will think we'll see that. For the political piece,
the
yes, I mean,
political
that's,
piece of them
yeah.
using that to try to um, fund the next round of political promises that they want to make.
Yeah, I mean, that's pretty common. I mean, that's whether we have federal funding come in or not. I don't think that would be a new tactic there. So yeah, I would expect to see that as a tactic for increasing the budget next time. Oh, we need to maintain this funding for X, Y, or Z. Yeah, I think we'll see that.
I don't think they'll say we need to maintain it. I think they'll say the total amount of money that was available last biennium was X.
Mhm.
Should not be going backwards
Yeah,
in the future,
yeah.
not to going back to the dark ages.
Yeah, and to be clear, I think that'll be the case no matter who is in the majority. I think that's just standard practice, it seems like. But someone who on my team might be better suited to answer that question, maybe Gary Chandler, who is our government affairs, the president of our government affairs team later. He has said that as he served, this was kind of the most anti-business climate that he had experienced, Great Recession, business or a serious revenue because of that recession. This one a little more. I'm actually over here in Spokane meeting with our members here locally. I try to get out there.
Yesterday afternoon, about 4 o'clock, we had our Kent Chamber of Government Affairs Committee meeting, and one of the issues that came up, or just topics that came up, was whether or not there would likely be a special session to deal with potential additional transportation related taxes to fund a transportation package. Do you have, as somebody who pays attention to that, do you have?
We do. We do have Mike Ennis on our team who's been with us for more than 10 years. He's exceptional. He handles all things transportation. There have been rumors of that.
Well,
Huh.
what do you think? Likely, unlikely, unknown?
I couldn't speak to that issue area at all. I deal strictly in my issue areas, and I defer everyone in other areas to those policy people because they're just going to be more knowledgeable than I am. It's if there is a special session for transportation, I probably wouldn't be engaged in that at all. Mike's email is mikee@awb.org. So all of our emails, with the exception of mine, as their first name, last initial, at awb.org. We have two Tommy G, so I'm Tommy JG, just in case you need to email me for anything. That gets confusing. But he is our transportation person. He's actually holding a series of transportation meetings. I'll also get Zenobia the list of those schedules for you if you'd like to sit in and hear what's going on in the transportation piece.
Thanks very much.
Absolutely. Right. Any other questions? Again, if anything comes up after this call, please feel free to reach out to me. I'm always happy to be a resource. And Zenobia and team are fantastic, so you can reach me through via them if you don't have my contact.
Yeah, no problem. Can you guys hear me okay?
Yeah, can hear you.
Okay, good. I had to call in, so it looks weird that I'm on the phone, but I had to call in because my internet's kind of shoddy. But I did want to say thank you to Tommy for this presentation, but also just the information that we get from AWB, keeping us up to date. We'd love to have you come to one of our government affairs and give us some updates on things like that. Hopefully I got the website correct. I thought that was really great information where we can go in and get information and sign up. So I'll make sure to socialize that within the chamber membership. But I appreciate all of you guys being here today. And if there are no further questions, I'll let you have some time back in your day. But I definitely appreciate you all being here and getting the information that was needed. And of course, this is recorded and will be hosted on our YouTube channel. So if you feel like you need to send it out to anyone, but we'll make sure that the full membership gets a copy of this video today.
Thank you, Zenobia. I appreciate you having me on, and I'll get you the supplemental materials that I promised the participants by the end of the week so that you can distribute them.
Okay. Sounds good. Well, thank you all very much. Have a wonderful day.
Thank you.
Bye, everyone.